Hi, we all are aware that near about 5,000 companies are listed on the Indian stock market, belonging to different sectors and industries. This humongous number makes it impossible for investors to track and monitor the performance of each of these companies and also their impact on the overall stock market. Thus, to make things less complicated, indices were constructed. So, what is meant by indices? Market indices is a collection of a group of stocks that helps to measure the performance of the overall or a smaller subset of the market. In other words, indices help investors to ascertain the health of the stock markets and also make it easy for investors to compare the performance of individual stocks against the performance of the overall indices. So, indices act as a barometer for the performance of the overall stock market. However, some investors may delve a little further and try to understand how the market subsets or sectors are performing to make a better investment choice. Every listed company belongs to a particular area of the economy or specific sectors, and businesses grouped within the sectors share related interests. This division of businesses allows investors to conduct a greater analysis of the overall market to identify the most promising sector and ascertain how a particular company is performing vis-à-vis the sector, and also helps in conducting peer group analysis. This is where the need for a sectoral indices comes into play. These indices not only measure the economic performance of a sector, but also provide investors with summarized, comprehensive, and reliable sectoral information. It also lists down how performance of one sector influences the other. In India, under both BSE as well as NSE, there are 39 sectoral indices, such as BSE and Nifty Auto Index, BSE and Nifty FMCG Index, BSE and Nifty Metal, etc. As mentioned earlier, that indices are a collection of few stocks that represents a particular sector. Now, one must be thinking of how a sectoral index is constructed. Or, in other words, what is the selection criteria for the list of stocks that are included in the indices? For a stock to be a part of an index, it has to qualify certain stated criteria. And if it fails to maintain the criteria, it gets replaced by a better alternative that qualifies the prerequisites. Now, once the stocks are selected, they are assigned certain weightage. Weightage, in simpler terms, defines how important a particular stock is in respect to others. So, how are weights assigned to the stocks that make up the sectoral index? There are many ways, but the Indian stock market follows the free float market capitalization method. This is calculated by multiplying the share price of a company with its number of shares that are publicly or readily available in the market for trading. The company with the larger market capitalization is assigned the higher weight. So, the performance of the index will be most sensitive to price changes in the company assigned higher weightage and vice versa. By now, we have understood that sectoral indices are an important part of the stock market. So, let us now understand the need or role of sectoral indices. The first and the foremost role of sectoral indices is to help investors in sorting or to choose the best investment alternative among the basket of stocks available in the market. The sectoral indices act as a filter that helps investors to differentiate companies based on their price performance, market capitalization, etc. They also act as a representative of the performance of the entire sector, based on which investors can take an informed decision. Gauging the sectoral indices provide investors with information on how a particular sector is performing vis-à-vis the overall market. Sectoral indices helps investors to have an understanding of how a particular company is performing, not only in comparison to the overall sector, but also in comparison to other companies belonging in the particular sector, that is, peer comparison. The next role of the sectoral indices is that they reflect the investor sentiment towards the overall sector. It would become difficult to gauge investor sentiments correctly in the absence of any index. Investor sentiment plays an important role in determining the demand for a particular stock. A positive sentiment leads to higher demand and subsequently a rise in price. Sectoral indices help investors in planning their passive investments. Beginners who are not much aware of the stock market or lack the knowledge or time to research a stock prefers to invest in the sectoral index. So, this is how the sectoral indices facilitate the investors in identifying the general growth pattern of the overall sector and also help them to choose and compare the best performing stocks within the sector. Thank you for watching the video. Investment in the securities market are subject to market risks. Read all the related documents carefully before investing. Such representations are not indicative of future results.